Hey there, future real estate moguls. Grant Cardone here, ready to guide you through the exciting world of real estate investment. Ever walked by a massive skyscraper and thought, I want that? Or maybe just a cozy little bungalow with a white picket fence? The beauty of real estate is that there's something for everyone. But like any good jungle, it's got its twists and turns. Don't worry, I've explored them all, and I'm here to show you the ropes. Get ready to transform those what-ifs into why-nots. We're about to dive deep into the strategies that turn ordinary people into real estate titans. From identifying hidden gems to navigating the market like a seasoned pro, you'll learn everything you need to make smart, profitable decisions. So buckle up, get comfortable, and get ready to conquer the real estate jungle. The only question is, are you ready to build an empire? Let's face it, money doesn't grow on trees, or does it? That's the beauty of real estate. It's one of the most tangible, predictable ways to grow your wealth. Think about it. People will always need a place to live, work, and shop, right? That's where you come in, my friend. As a real estate investor, you're not just buying property, you're investing in a necessity, a fundamental pillar of our society. But it's not just about providing shelter, it's about building your own financial fortress. Real estate offers incredible potential for long-term appreciation, passive income, and even some sweet tax advantages. Plus, you become your own boss, calling the shots and building a legacy that lasts. Who wouldn't want a piece of that action? Now I know what you're thinking. Real estate sounds complicated, right? Wrong. It's like building with Legos, just with bigger blocks and better returns. Whether you're starting with a small apartment building or a sprawling commercial complex, every investment is a brick in your empire. In this game, knowledge is power. And trust me, I'm about to give you a power surge. We'll explore different types of properties, from cozy residential homes to bustling commercial spaces. You'll learn how to analyze deals, spot opportunities, and navigate the market like a pro. Remember, Rome wasn't built in a day, and neither are real estate empires. But with the right strategies, your journey to financial freedom starts now. All right, rookies and veterans, let's talk residential real estate. This is where most investors get their start, and for good reason. It's familiar territory. Everyone needs a place to live, right? You've got your single-family homes, duplexes, triplexes, and those massive apartment complexes. Each one has its own personality, its quirks, and its profit potential. Think of it like this. Residential real estate is like that reliable friend you can always count on. They might not be the flashiest or the most exciting, but they're always there for you, providing a steady stream of income and long-term growth. Plus, everyone loves a good housewarming party, right? But before you jump in head first, remember every property has a story. Your job is to uncover that story, understand the market, and make sure it aligns with your investment goals. Are you after cash flow, appreciation, or a bit of both? Don't worry, we'll break it all down. Section 2, Single-Family Homes, a solid foundation. Let's start with the classic single-family homes. These are the bread and butter of residential real estate. They're easy to understand, relatively easy to manage, and there's always a demand for them. Think about it. Everyone wants their own little slice of heaven, a place to call their own. Now, single-family homes might not bring in the massive cash flow of a skyscraper, but they offer stability and the potential for steady appreciation. Plus, there's something incredibly satisfying about providing a family with a comfortable and safe place to live. It's like being a landlord with a heart, but don't get too sentimental, we're here to make money. But remember, location is key. You don't want to be stuck with a money pit in a declining neighborhood. Look for areas with good schools, low crime rates, and a growing job market. These are the factors that attract tenants and drive up property values. Section 3, Multifamily Units, multiplying your returns. Now, if you're looking to level up your real estate game, multifamily units are where it's at. Think duplexes, triplexes, fourplexes, all the way up to those massive apartment complexes. These bad boys are all about generating serious cash flow. Imagine this. Instead of collecting rent from one tenant, you're collecting from multiple tenants every month. Talk about a steady stream of income. Plus, multifamily units often come with economies of scale. Managing multiple units under one roof can be more efficient than managing several single-family homes scattered across town. But hold your horses. Multifamily units come with their own set of challenges. You're dealing with more tenants, which means more potential headaches. Plus, the initial investment can be higher compared to a single-family home. But hey, bigger risks often come with bigger rewards, right? Section 1, Commercial Real Estate, leveling up your portfolio. All right, real estate rebels, ready to take your investments to the next level? Let's talk commercial real estate, the big leagues where fortunes are made. We're not talking about your grandma's cozy cottage anymore. We're talking about the skyscrapers, shopping centers, and industrial complexes that power our economy. Think of it this way. Residential real estate is like owning a fleet of reliable pickup trucks. They get the job done. But commercial real estate? That's like owning a fleet of 18-wheelers. They haul in the big bucks. And trust me, the potential returns can be staggering. But just like driving an 18-wheeler requires a different set of skills than maneuvering a pickup truck, investing in commercial real estate comes with its own learning curve. You're dealing with different leases, different tenants, and a whole new level of market complexity. But hey, that's what makes it so exciting, right? Section 2, Office Buildings, the heart of the business world. Now let's talk about those towering symbols of ambition and success office buildings. These are the command centers, the idea factories, the places where businesses thrive. And as a savvy investor, you can own a piece of that action. Think about it. Every company needs a place to call home. And what better address than your prestigious office building? You'll have a steady stream of businesses paying rent, generating a healthy cash flow that would make even Scrooge McDuck jealous. But here's the catch: location is everything. You don't want to be stuck with an empty office building in the middle of nowhere. Look for prime locations with easy access to transportation, a thriving business community, and amenities that attract top-tier tenants. Remember, happy tenants mean happy returns. Section 3. Retail spaces, where shopping meets investment. Ready to cash in on the consumer frenzy? Then let's talk retail spaces, those bustling hubs of commerce where shoppers indulge their every whim. From trendy boutiques to massive department stores, retail spaces offer a unique opportunity to tap into the pulse of consumer spending. Think about it. People love to shop. It's practically a national pastime. And as the owner of a prime retail space, you'll be collecting rent from businesses eager to capitalize on that consumer demand. Plus, there's something incredibly satisfying about owning a piece of the retail landscape, watching your investment come alive with the energy of shoppers and the success of your tenants. But remember, the retail world is constantly evolving. Online shopping, changing consumer preferences, and the rise of experiential retail are all factors to consider. To stay ahead of the game, look for retail spaces in high-traffic areas with a good mix of tenants, strong demographics, and the flexibility to adapt to changing trends. Section 1. Location, location, location. It's not just a cliche. All right, real estate renegades, let's talk location. You know the saying, right? It's not just a cliche, it's the holy grail of real estate investment. Think of it like this. You wouldn't open a seafood restaurant in the desert, would you? Okay, bad example, maybe some people would go for that. But you get the point. Location is everything because it dictates demand, desirability, and ultimately, your return on investment. You want to be where the action is, where people are clamoring to live, work, and play. Look for areas with low crime rates, good schools, easy access to transportation, and a thriving job market. Remember, you're not just buying a property, you're buying into a neighborhood, a community. So, put on your walking shoes, explore different areas, and get a feel for the vibe. Ask yourself, would I want to live, work, or shop here? If the answer is yes, you're on the right track. Section 2. Market demand, riding the wave of opportunity. Now, let's talk about market demand, the driving force behind every successful real estate investment. It's like surfing. You want to catch the right wave at the right time. You don't want to be paddling against the current, struggling to stay afloat. So, how do you gauge market demand? Look for areas with a growing population, a strong job market, and limited housing supply. These factors create a recipe for high demand and rising property values. Check out local real estate reports, talk to agents, and attend industry events. Remember, knowledge is power, and in the real estate game, information is your secret weapon. The more you know about the market, the better equipped you'll be to identify opportunities and make smart, profitable decisions. Section 3. Property condition, avoiding money pits, and finding hidden gems. All right, let's talk about property condition. Now, I'm all about seeing the potential in everything, but even I have my limits. You don't want to get stuck with a money pit, a property that sucks up your cash flow faster than a thirsty camel in the desert. Before you sign on the dotted line, get a thorough inspection. Bring in the experts, the contractors, the inspectors, the whole gang. You want to uncover any hidden problems, any structural issues, any nasty surprises lurking beneath the surface. But here's the thing, sometimes those problems are actually opportunities in disguise. A property that needs a little TLC might be a diamond in the rough, a chance to add value and boost your returns. So put on your renovation hat and get creative. Section 4. Appreciation potential, watching your investment grow. Now let's talk about appreciation, the magic word that makes every real estate investor's heart skip a beat. Appreciation is the increase in the value of your property over time, and it's like watching your money grow on trees. Okay, maybe not on trees, but you get the idea. Now, appreciation isn't guaranteed, but there are factors that can increase its likelihood. Look for properties in desirable locations, with good schools, low crime rates, and a strong job market. These factors attract buyers and drive up demand, leading to higher property values. Remember, real estate is a long-term game. Don't expect to get rich quick, but with patience, smart investments, and a little bit of luck, you can watch your portfolio grow steadily over time. Alright, real estate warriors, let's talk risk management. Because in this game, you can't just throw darts at a board and hope for the best. Remember, we're building empires here, not playing roulette in Vegas. Sure, taking calculated risks is part of the game, but you don't want to bet the farm on a single roll of the dice. Think of risk management as your suit of armor, protecting you from unexpected market shifts, economic downturns, and those pesky unforeseen expenses that love to pop up at the worst possible time. It's about having a plan, a strategy to mitigate potential losses and protect your hard-earned investments. Now, I'm not saying you should be scared to make a move. Calculated risks are the fuel that powers our real estate engines, but those risks should be backed by solid research, careful planning, and a deep understanding of the market. Remember, fortune favors the prepared, not the reckless. Section 2. Diversification, spreading your risk, not your toast. One of the golden rules of risk management is diversification. Don't put all your eggs in one basket, unless you like omelets with a side of financial turmoil. Think about it. If all your investments are concentrated in a single property type, a single market, or even a single neighborhood, you're extremely vulnerable to any downturn in that specific area. Instead, spread your investments like you're spreading butter on toast. Invest in different property types, different neighborhoods, and even different cities or states. That way, if one market takes a dip, your other investments can help cushion the fall. Now, diversification doesn't mean spreading yourself so thin that you can't manage your investments effectively. Start with what you know, expand gradually, and always be ready to adapt your strategy as the market evolves. Remember, a well-diversified portfolio is like a well-balanced breakfast. It sets you up for a successful day. Section 3. Market cycles. Timing is everything, except when it's not. Now let's talk about market cycles, the ebb and flow of the real estate world. Just like the tides, the real estate market goes through periods of growth and decline. And just like a savvy surfer, you want to ride the waves to maximize your returns and avoid getting wiped out. Understanding market cycles is crucial for making smart investment decisions. When the market is hot, prices are high, competition is fierce, and it's easy to get caught up in the frenzy. But remember, what goes up must come down. On the other hand, when the market is down, prices are lower, competition is less intense, and there are opportunities to be found. But it takes guts to buy when everyone else is selling, and patience to wait for the market to recover. Now, predicting market cycles with pinpoint accuracy is impossible, but by studying historical trends, analyzing economic indicators, and staying informed about market conditions, you can make educated decisions and position yourself for success. Remember, timing the market perfectly is a fool's errand, but understanding market cycles is a wise investor's secret weapon. Section 1. The real estate empire awaits. So there you have it, future real estate titans. We've journeyed through the lush jungles of residential and commercial real estate, scaled the dizzying heights of market analysis, and even learned to navigate the treacherous waters of risk management. Remember that map I showed you at the beginning? Consider it marked up, with all the shortcuts and secret paths to real estate success revealed. We've covered the importance of location, knowing your market like the back of your hand, and spotting those diamond-in-the-rough properties. Remember, due diligence is key. Don't be afraid to get your hands dirty, ask tough questions, and walk away from a deal if it doesn't feel right. Trust your gut, but back it up with solid research and expert advice. Section 2. Your journey starts today. Now I know what you're thinking, Grant. This is a lot to take in. And you're right, it is. But here's the beautiful thing about real estate, it's a journey, not a race. You don't need to become a mogul overnight. Start with small steps, learn as you go, and never stop growing your knowledge and your network. Remember, the best time to plant a tree was 20 years ago. The second best time? Today. Don't wait for the perfect opportunity or the right time. Jump in, get your hands dirty, and start building your real estate empire one brick at a time. Who knows? Maybe one day you'll be sharing your own real estate wisdom with the world. Now go out there and make it happen.